Good morning to all of you and to our panel, and welcome to ECSA's third finance webinar dedicated to transition. My name is Martin Dorsman. I'm ECSA's Secretary General, and I have the pleasure to moderate the discussion today. For those of you joining us for the first time, a quick introduction about ECSA. ECSA represents 19 national shipowners associations based in the EU and Norway. European shipowners control some 40% of the global commercial fleet, contributes 149 billion euros per year to the European gross domestic product, and provide 2 million people with careers both on board and ashore. ECSA strives for a regulatory environment that fosters the international competitiveness of European shipping to the benefit of the EU. In order to remain competitive while delivering on the sector's commitments to decarbonization, European shipping needs access to finance against competitive conditions. For the sector to remain a strategic asset for the EU, it's crucial to retain access to finance from European sources as well. We already see an increase of the share of ship finance coming from Asia and especially from China. With this main objective in mind, ECSA has decided to organize this series of webinars on finance, innovation and transition to highlight the unique position of the industry in its transition towards zero emission and to bring together regulators, industry stakeholders and experts from the finance world to discuss solutions. Let me have a quick overview on the first two webinars. In our first webinar on the topic of finance, we were informed about the work ongoing at EU level on financing and funding, as well as the approach being considered by regulators when defining the regulatory environment for the coming years. We heard of the need to address business risks for banks looking to invest in green shipping, but also of actions that can be taken to increase the visibility of green financing options, and especially also to reduce the administrative burden on operators. One of the main takeaways was that the need for a stable and predictable regulatory framework, which was highlighted by most speakers. Given the long lifetime of vessels, ship owners investing in new builds need to have the certainty that those vessels will not become stranded assets after a few years due to a sudden change in the regulatory framework. And I think that the ongoing debate about LNG, the introduction of which was heavily supported by the regulators, should be a cautionary tale as the industry seeks to invest sustainably and competitively in transitional and innovative technologies. A second takeaway was the need to ensure the regulatory framework and the resulting funding and financial products are tailored to the needs of the sector. The shipping sector is very diverse, including different market segments, different cargoes, different sizes, different business models. Access to tailored financial products or public funding is therefore key to ensure the sector remains competitive across the board. And you will hear the number of times I mentioned the word competitiveness. It's crucial for the industry. This is true also when it comes to the process. For example, smaller ship owners often do not have the resources to investigate available EU funding. And the application, and if successful, the reporting requirements can be too demanding for the smaller operators. Perhaps a possible solution is for the Commission to establish a dedicated web-based tool, advisory hub, to help ship owners. Our second webinar on innovation tackled the challenges of financing innovative technologies to achieve zero-emission shipping. The industry is fully committed to meet its decarbonization objectives in line with the ambitions of the Green Deal. This, however, presents us with a unique set of challenges when it comes to access to finance. And we need to address a set of risks different in nature. Innovative ideas are there, but these innovative ideas need to be scaled up so ship owners can access these technologies in terms of economic sustainability. Investing in innovation always comes with an increased financial risk, and it's important to find financial structures to address these financial risks. In many cases, when we think about innovation, we immediately associate it with new builds. But innovative ideas are also vital to address retrofitting. And this requires innovative ideas in financial structures as well as regulatory support. In this context, one example is the proposed revision of the ETS directive under the Fit for 55 package. While we would have preferred an international solution for shipping, ECSA welcomed the increased climate ambition of the EU and recognizes that shipping should contribute its share to address the climate crisis. In order to achieve this objective, ECSA is advocating for a dedicated fund to be set up under the EU ETS, with its generated revenues allocated to support the sector's decarbonization, also taking into account the role of other stakeholders in the supply and logistical chain. But of course, while the industry is working towards zero-emission vessels, the final solutions are currently not yet available. They are in the making. In the meantime, the industry is also taking action to reduce emissions. We know the end goal, but we need to get there. And so today we close our webinar series with a discussion about transition. How do we bridge the gap until we can achieve full decarbonization? What do ship owners need from other stakeholders to be able to invest safely and competitively in transitional technologies? What do banks and financial institutions need to work on effectively with ship owners in this transitional phase? And what can Europe do to help? Before leaving the floor to our distinguished speakers, a few words about our setup today. You can ask questions to our panelists by using the dedicated tab with the question mark at the top right of your screen. Since we have limited time, we might not get to all the questions during this session, but our team will be in touch with you to discuss your questions if that is the case. Please also note that this webinar is being recorded and will be published on ECSA's social media channels. I now have the pleasure to introduce to you Annika Kroon, who has kindly agreed to set the scene for us today. Annika is Deputy Head of the Maritime Transport and Logistics Unit in the Directorate General for Mobility and Transport in the European Commission. Her areas of responsibility are related to logistics and digital transport solutions, but also funding and financing of transport. She first got involved with sustainable finance and the taxonomy from the railways perspective and switched to maritime in 2019. Annika is an economist with a master's in cybernetics in economy and a master in international finance. Before joining the European Commission in 2008, she has worked as financial and business analyst for various public and private organizations. Thank you, Annika, for being with us today, and the floor is yours.
Thank you, Martin, for the introduction, and I'm very pleased for this invitation and happy to be here. Good morning, ladies and gentlemen, and here comes my introductory presentation to set the scene for the discussion today. It's a challenge to say something new after two seminars which have already been taking place and Martin's very comprehensive conclusions. But I will try to outline how we have approached from the EU policy viewpoint and perspective this challenge of transition, and to ensure that we get all the framework conditions right and in place so that we can support the sector while on one hand putting the regulatory pressure, but also creating policy framework and giving funding and financial support so that we can achieve this target system. But before going there, then maybe let's try to recall what is the challenge ahead and what is the transition we are talking about. So we can move to the next slide, please. So from the waterborne transport perspective, Tailline targets, of course, I did not put them on the slide because I expect everybody to know that we have to cut 55% of the EU overall CO2 emissions by 2030 and become climate neutral by 2050. This is a Paris Agreement. This is our Green Deal, which have been signed by all EU member states through the climate law. But if we get down to the transport and waterborne transport in particular, then today maritime transport provides about 30% global CO2 emissions, 60% of SO2 and 22% of NOx. But by 2030, by 2050, we have to reduce transport emissions total 90%, which also means pretty much the same amount for maritime transport according to our modeling exercises. And while now at the moment, share of low carbon fuels in maritime fuel mix is only 1%, then by 2050 this share has to be 80%. So that is immense challenge ahead. And this all in the conditions where today we have zero emission solutions only for short distances, and in most cases they are still in terms of price not competitive with the traditional services. And now we aim, as a result of transition, by 2030 have zero emission ocean-going vessels ready for market. This commitment is set in the Sustainable and Smart Mobility Strategy, which was adopted by Commission at the end of last year. And in terms of investment and financing for this transition, I don't have figures particularly for maritime, but for all transport modes, we need additional 2,030 billion euros per year compared to what was the average in last decade. So where this 2,030 billion comes from is that about 130 billion per year would be for deployment of renewable and low carbon fuels and vessels, and about 100 billion for infrastructure, including digital upgrades. So that is what the 2,030 billion is composed of. So that gives the view of the challenge or the idea of the scale, what we have to tackle. So if we now move to the next slide, I thought that how to structure my introduction today, and I took the points which were put forward by the ECSA and the organizers of this seminar, that we would look at the nature of the risks involved and think how we can handle this transition, leaving no one behind, and what we need to do the transition financing and filling the investment gap. So we can go to the next slide. So the nature of the risks involved, I think they had already quite well outlined by Martin in his introductory speech. But I would then remind briefly that technology, of course, while we have a target system set net zero by 2050, and we have some progression steps on this way, the industry has to now pick the right pathway, and we don't have yet ready technology solutions. There are different pathways, and most of them today are by far too expensive to be competitive with the traditional solutions. And the sector is very actively exploring options such as battery, sustainable biofuels and hydrogen, and its derivatives such as ammonia and methanols. But this is the dilemma from the regulatory perspective, that while we have to provide a certainty, we should, like said, have been learned lessons from the earlier times and LNG, that we cannot bet on one technology. On one hand, betting on one technology would ease the opportunities to scaling up and standardizing. At the same time, it can create the risk that we will put our eggs in the wrong basket, and in 10 years have to really consider that we have made maybe wrong investments. So we believe now that with the Fit for 55 package, we have a regulatory framework in place. At least it's not in place, but Commission has put its proposals on the table, and discussions with the sector and member states will continue. But that is the aim, that we have a certainty what is ahead. But regulatory framework stays technology neutral, and that's a conscious choice to avoid the the trap in one technology which may not be the right one. So they aim to price carbon, which should give incentives to look for energy efficiencies in every possible way. And at the same time, with the FuelEU Maritime, we also set the pathway for reducing greenhouse gas intensity of energy used in shipping. So on the one hand, we tried to improve energy efficiency, at the same time make the fuels more green. And that sets the targets, but it still remains for the industry and research to find the right and most efficient pathway to get there. What is also important in this regulatory certainty framework is that we need also global alignment, as mentioned. IMO has set the goal of decreasing the total annual greenhouse gas emissions for maritime industry by 50% by 2050. This is not in line with the Paris Agreement and also not in line with the EU as well as many other states who participate in IMO. So we expect and keep pushing that when IMO greenhouse gas strategy will be revised, these targets will be more ambitious. Global alignment would definitely simplify and reduce the risks for the industry. So what is still important is, of course, that we have to level this transition, manage this transition at system level. So it's not just about vessels, it's also about the fuels, availability and supply of such fuels, research for the engines and infrastructure for distribution of fuels. So therefore, the Commission measures do not just deal with energy efficiency and fuels, but they also include policies to supporting the production and supply of such fuels. And namely, via the revision of the Renewable Energy Directive and distribution is tackled by Alternative Fuels Infrastructure Directive. And part of the Fit for 55 package was also Energy Taxation Directive. And for research, we have established under Horizon Europe a zero-emission waterborne partnership together with the industry to develop and deploy new technologies, which by 2030 hopefully will give this pathway for large-scale commercialization of new technologies. So that takes me also to the next point. It has been, it's not next slide, but still the next point in previous slide, maintaining EU shipbuilding industry strategic position. Because, it has been for last decade a true challenge to maintain EU shipbuilding industry position vis-à-vis the unfair competition from Asian shipyards. With the regulatory tools, everyone is aware of the problem, but it's very difficult to protect the industry. So maybe we have to look at the wise ways that there is a competitive advantage where actually Asian shipyards are less competitive. And there, I think there is an edge at this stage where European maritime shipyards and the maritime equipment industry providers have in developing new advanced technologies. Transition could be opportunity in this regard, where we create ecosystems which are just by design more accessible and competitive for European part of industry. For example, retrofitting of vessels will probably give advantage for European yards because ship owners would not take their vessels for retrofit for Asian yards. And if we have technologies which we can scale up, this can definitely support also strategic position of this industry. And while these previous points look at the things from the economic and industry viewpoint, then there is also high risk of being late from societal perspective, but it also carries over the industry side because we have seen how quickly the extreme weather conditions and the events have emerged over the last 5-6 years, and that also impacts the business of everybody as well as our future. So we can go to next slide. So with this feel of uncertainty and urgency, we still have to see that no one should be left behind. The first feedback for 55 package, Fit for 55 packages raises concerns on industry sides that whether ambition has been set too high and maybe the transition period set in legislation is too short. But on the one hand, we have to take into account today's reality. At the same time, it's essential that the proposed EU policies exert pressure, because this would put the industry and research on move. But of course, we have to assist with our financial tools and also policy frame. So getting now really to transition financing, that what are the qualities or features what we have to take into considerations. So we have to provide a range of products and solutions while mitigating these transition risks, which I mentioned earlier, and also ensure coordination and across the value chain. And what is also important and sometimes forgotten that it's not just about energy efficiency of fuels or vessels, but it's also about optimizing business models, ensuring that vessels will not run empty, that they're due to their bottlenecks in supply chain, there will be no, let's say, that there will also improve the efficiency of port operations. And we can use digital tools to actually optimize the sharing of information across the value chain. And there are elements such as, for example, collaborative decision making, which helps to use existing resources better. And also we hope that consumers and users will become more conscious of their choices, because we don't need our lipsticks the day after, and we have to keep public aware of what is the real cost of their choices. And also, yes, shipping industry is a very diverse, like Martin mentioned, there are different vessel types, different cargoes, different business model, ownership models. Getting incentives right is quite a challenge, and the financial tools and products have to be geared to cater these different needs. We can go to next slide, please. So, from the EU perspective, so we have to see that we can cover these different phases. Innovation Fund is a fund which will be supported from the revenues from ETS. And it's important that these revenues will run back to the sector to support zero emission vessels and low carbon fuels. Innovation Fund will fund high scale innovation projects, and it also helps to develop ecosystem or value chain based approach, which also can support European industry. That's maybe important to consider. Then Connecting Europe facilities is an infrastructure funding, and it includes transfer blending facility and CEF-DEP instruments, which can be geared then to provide support to infrastructure, including infrastructure for distribution of fuels. Then Invest EU is a key tool to manage by European Investment Bank Group, which means the Bank and Innovation Fund, Innovation Fund. And it includes 3 windows: so sustainable infrastructure window, research, innovation and digitalization window, and SME window. And we have worked a lot together with the bank and other DGs to ensure that the priorities reflect the transition and sustainability as defined in our policies. Then we have Horizon Europe to support research, and it includes the new zero emission waterborne technology partnership, which aims to get this zero emission technology by 2030 at the level that it can be deployed at large scale. So we have about 8-9 years to get there. And then Recovery and Resilience Fund and European Structural and Investment Funds. These reflect member states' priorities. While we check what member states are in line with our policy headlines, they are still up to member states what to propose. And so far, I have to admit that maritime priorities are not that high at the level of member states' agenda based on the if we decide based on what have been submitted for Recovery and Resilience Fund planning. So there, please see with the member states whether you can promote the investments into waterborne transport. So that being said, if I now recall that how big was the investment gap, then it's clear that it's not sufficient, that we use only public funds, and leveraging the public funds with the help of private investments is more important than ever before. So therefore, success of shipping industry goes hand in hand with the policies, but also with the green mindset and the flexibility of financial services industry. And CEF, Horizon, and also Invest EU, they all now include instruments which build on blended solutions or public-private partnerships, so that we can include more funds in, let's say, consistent manner. And there is EU taxonomy framework which has been set up to develop common understanding which investments take us towards the new net zero and guide the decisions of financial institutions and private investments. Taxonomy framework is new and complex. There is a lot of work ahead. We continue to work with ECSA on this one. But in July, the Platform on Sustainable Finance published also its draft report on the potential extended taxonomy to support particularly economic transition, even these areas where we can consider that these are sectors which contribute significantly to climate. But as said, every bit counts, and we have to front load the transition and the emission savings as much as possible. I would stop here, waiting forward to hear from the other participants today. And this is the broad framework, but discussions continue with the stakeholders as well as member states. So we are at the beginning, not at the end of this setup. Thank you.
Thank you. Thank you very much, Annika, for this very comprehensive overview. You certainly gave a good impression of the challenges, the investments needs, and the huge amount of it. And I was also very pleased to hear that you stressed the need for regulatory certainty and also the global alignment. And certainly the IMO has to decide in 2023 about the final strategy on the reducing greenhouse gas emissions. And it's well understood that the EU is pushing for more ambitious targets than the initial strategy has concluded in 2018. I would now like to introduce to you the three other members of the panel. So I will introduce them to you, all the three together, and then I will give the floor to Thomas Reder first. Thomas Reder has 32 years of experience in the shipping sector, and basically all our panelists have that same amount of years of experience, so that's quite impressive. Thomas passed his military service at the German Navy and worked as assistant shipyard manager prior to earning a business degree at European Business School in Frankfurt. In 1981, he joined Intercontinental Chartering, New York, as a chartering broker for 3 years. In 1984, he moved to Hamburg to work as a chartering broker with the family company Carsten Reder. Since 1987, he is managing partner at Carsten Reder, where he also became responsible for the shipowning side of the business in 1996. Mr. Reder has been active for many years in various trade organizations and currently holds a position as member of the board of the German Shipowners Association and of ECSA, for which he also served as vice president and president. Turning to Mr. Fabrizio Fitossi, not only is Fabrizio a real expert in corporate finance, but he has been engaged with the shipping industry for 3 decades, as I already said. He knows the most mysterious corners of ship financing. So Fabrizio, we are really looking forward to your presentation. He worked for a number of banks dealing with shipping investments, mergers and acquisitions. In 2009, he founded Finnish Shipping and Logistics, specialized in ship finance. He's the managing director of the VSR officers aimed in the shipping, maritime and logistics sector by flexible instruments through the club formula. Amongst other positions he holds, he is the chairman of the ECSA Ship Finance Working Group and Italy's B20 delegation on innovation and financing. And turning to Mr. Guust Wiesbroek. Also, Guust is a seasoned international maritime and ship finance professional. He has had an international career in the field, spanning almost 3 decades in commercial and risk management roles, based in the Netherlands, Greece and Hong Kong. As from 2008, Guust served as global head and managing director transportation clients for ABN AMRO Bank, at the time one of the leading ship finance franchises in international banking. Since 2018, Guust has focused on advisory work in the maritime space with a special interest in developing new business and financing models for investing in clean and alternative fuel propulsions, benefiting from his know-how gained through his involvement with the Sustainable Shipping Initiative, Climate Bond Initiative and several other projects and initiatives. In 2020, he co-founded Prow Capital, a fund manager focused on providing financing to the maritime industry's transition towards a zero-emission future. Turning to Mr. Thomas Reder. Thomas, can you please give the industry's perspective regarding the ship finance challenges linked to transition?
Yeah, thank you very much for the introduction, Martin. And I'm not sure if the many years of experience are really an asset for this discussion. And maybe we should have others contribute who have much less experience, but maybe more future ahead of themselves. But, you know, be it as it may, I think Annika Krohn has already brought up a number of important points on which I would like to also follow up on. I think an important point that you mentioned is that we are talking about a very intricate system of different players when we talk about the maritime industry. And we have the owners, the operators, the ports and the shippers, and each one of them has a very distinguished, very distinct and different function in the chain. And at the same time, it is not only a very diverse industry, as you said rightly, Martin, it is also an industry that works in conditions which are characterized by the attributes of being global, probably one of the most global industries we can find, standardized, because we can only be global if we are working on the basis of common standards. We are working with very expensive assets with lots of capital involved, and therefore we always need the long-term perspective. And because we must remain competitive, Martin, your buzzword, which is important, we need a level playing field. So this is, if you like, the background against which I would like to make a few remarks. I think what is very important, bearing in mind the system that Annika Krohn mentioned, is that each measure to improve sustainability, be it in finance or otherwise, must address the correct corresponding element in the value chain. Now, the other day I wanted to finance a bulk carrier, and the bank tells me that they would perhaps do that, but only if I could exclude coal as a cargo, because that's a fossil cargo. Now, that is a typical example of a misdirected measure, because we are tonnage providers. We order a bulk carrier or we own a bulk carrier. This vessel is good for 25 years of operation. And we then charter the vessel out to international operators who work with lawful cargoes. For as long as coal is a lawful cargo, I cannot exclude coal as a cargo that I carry, even though it may become less over time. And at the same time, what should be achieved is that the ships that we build are the most CO2 efficient and the most fuel efficient that we can possibly do, irrespective of which cargo we carry. You can even take a more extreme example, and I think there are efforts made that the transportation of frozen beef shall be excluded from ships that are supported by green finance. Now, if we have, and we do have, like many others, container ships on the drawing board that are extremely CO2 reduced, if we carry cargo on a container ship, which we charter out to any of the big liner companies, and this operates in a feeder service in Europe, we have no way of knowing if there's a reefer container with beef on board. If we were to exclude this, we were to exclude ourselves from any financial support for innovative new buildings. The other point I think you also made clear, Annika Krohn, was that each measure must reflect the transitional nature of the trade and of the current status that we are in. Because at this moment, of course, we still carry a lot of fossil cargoes. We also have to rely to a large extent on fossil fuel. And whatever we are now embarking on in investment must be ships that are also suitable for a lesser proportion of fossil fuels. So we need to have this transition addressed. That's extremely important because it is not done from one day to another. And I think you rightly pointed out that we have to go from 1% to 80% in low carbon fuels. If that is so, then I think we must make sure that we are not addressing the problems and the questions from the end of the value chain, what they call the tailpipe approach, but rather look at each individual element and then make sure that we are not just grasping for the vessel, because that is at the end of the chain and the most visible and the most tangible asset, and of course also the most valuable. So it's the easiest to get hold of. Give you an example, I think in the operations of a vessel, it is much more efficient to concentrate on optimizing the logistics chain between ship and terminal, between terminal and land-based transportation, than just focusing on the vessel only. And how perhaps you can see that the focus can be misdirected, I think, is in the growth of ship sizes. When you look at the Port of Hamburg and you see the ship sizes that are coming in here, you can see that the number of ships is reduced, but of course the size is enlarged, and you have enormous peaks of cargo handling, which are also going to the limits of what the land-based organization can handle. So perhaps a more continuous flow of cargo would be beneficial from a holistic point of view, while from the individual economies of scale, of course, the largest vessel is always the best. So that's an important consideration, I think, when you look at the value chain. Another point that we should not forget is that whatever investments we are making today have a lead time of 2 or 2.5 years. So if we embark on ordering ships or financing ships today, then the ships will be afloat in 2024, the earliest, and then they should be good for at least 20, if not 25 years of operation. So we need to have a lot of flexibility in the way that these ships are designed and constructed, because we must address them, or we must make them suitable for a time when hopefully we can have zero carbon fuels, but we do not have them today. So this is a challenge, and it must be considered when we look at the necessary financing tools that we can that we have to apply there. And I think we would greatly support this if we were making asset-backed finance more available and easier to apply for ships that fulfill certain innovative criteria. Another point that I think you made, Annika Krohn, is also important, and that is the technology neutrality of measures. Because we have seen in the past that things turn out to be sometimes pretty temporary. We have all been having hot and heated discussions about scrubbers and whether we should finance scrubbers and how we should retrofit ships with scrubbers. And that is only 2 or 3 years ago. I'm not aware of anybody who's today seriously discussing a new building with scrubbers. Yet it was something which was very much on the forefront of our minds only a couple of years ago. And I think the same may go for certain other technologies and design criteria. And we must make sure that we are not getting ourselves into a dead end if we focus too much on individual characteristics. So technology neutral is an important attribute. Let me also remind you of the fact that shipbuilding is, of course, something of an exotic trade in Europe. And we do have shipyards still that are mostly concentrating on specialized vessels. But of course, 90%, if not more, of the commercial shipbuilding takes place in Asia. And with the enormous demand that especially from the container sector we have seen over the past year, facts have been created that are already setting a certain standard of technology for the industry. And I'm afraid because there was such an enormous sudden demand for new vessels, the new vessels that have been ordered are of course more efficient than the ones in the past, but they are by no means as ambitious as perhaps we would need if we wanted to achieve the goals for 2050. Yet they have all been ordered and they will be on the water for 25 years. And we should not forget that the Chinese yards especially, but also the Asian yards, have an interest in building large series of identical vessels that are not necessarily the most ambitious, but they should be the most efficient and the most profitable to build in large numbers. And that is running, that is counterproductive and running, I think, not in the same direction as what we need when we want to try out different types of technologies, maybe on a smaller scale to begin with. This is an opportunity for EU shipbuilders, but of course only if we can somehow balance the gap in cost between shipbuilding in the EU and shipbuilding in Asia. Finally, I think we must also look at the timeline. When I look at the deadlines that were set for cold ironing under taxonomy, I think this is unrealistic. And with all due respect, we know how long political decision-making takes in Germany. I think the EU is very ambitious in matching these long-term decision-making that we have in Germany. And if we are to have cold ironing across Europe in 2026, I'm very skeptical whether we achieve that. Yet the penalty for a port that does not have cold ironing is for the ship that calls this port and that cannot use cold ironing. So here again, the ship is caught and not the real culprit, which is the shore-based organization. Let me make one final remark, and then I think I've duly used my time. Annika Krohn has reminded us that it takes about 230 billion per year to turn the industry and the sector entirely green as we try to achieve in 2050. Now we see that, of course, there are various sources of funds and money being created by the different systems, by the different compensations, by the certificates that we have to expect under the European trading system. Where does all the money go? I'm afraid it will comfortably go into general households, and only a very small proportion of this money will end up in the industry. Yet, when I see that we would like to carry or to use methanol as a propulsion fuel, and at the same time I see how difficult it is to generate sufficient supplies of e-fuels and synthetic fuels, I think we must make sure that the funds that are generated by cost increases for the industry must go back to the sector in a way that benefits the production and the acceleration of the production of carbon neutral fuels. Maybe in a way like the Norwegians have done it on a national basis for the NOx fund a few years ago. So these are the points that I would just like to mention. In concluding, I would say in certain areas, the EU taxonomy is unfortunately characterized by an incomplete understanding of the maritime industry and at times at misdirected measures for the individual participants. I think we risk by having misdirected incentives that we are hampering EU shipping in certain areas more than we are supporting it. And finally, I think what it takes to be innovative is new buildings more than retrofits, because only then we can make the big steps. And for new buildings, we need asset-backed finance. And if asset-backed finance is more readily available on a basis that rewards innovative features and technology, then I think we would have a great support from the ship-owning industry and from the maritime industry at large. Thank you.
Thank you very much, Thomas, for this very clear industry perspective. I would like to suggest that I give Annika the floor to give a short reaction after we have also the other two panelists. Perhaps they might also raise some points you would like to react to Annika. And I would also like to invite the two other panelists to perhaps discuss some elements that Thomas raised, so to have a little bit of interaction. So I'm switching now to Fabrizio. Fabrizio, we understood that there is a significant interference between different regulatory proposals in the financial sector, which will have an unavoidable impact on ship financing. This will require attention from all stakeholders. So could you elaborate on this, please? Thank you.
Thank you, Martin. Thank you, everybody, for the invitation to this very, very interesting debate about the transition financing. So I catch up the hints and suggestion or provocation done by the previous speech by Annika Kroon and Thomas. And I will recall in my brief speech also this concept. Personally, I share what's stated by Thomas, which consider fundamental and crucial an holistic approach to the matter. So I prefer to start giving a very short pitch about the banking regulatory framework. So I think that is fundamental to start from the lender side, since in the next year we will see a fully entering force of a regulation number 630 is well known as a calendar provisioning, ruling the treatment of a non-performing exposure, which will impact usually on the balance sheet of the banks and the capital requirements of the banks. This was partially attenuated by the measures of temporary framework due to the pandemic. As well as we will see the full application of a new supervisory review and evaluation process, as well known as a SREP, or well known as a CRR, Capital Requirement Regulation, in the new version, second version, which will review the previous one of CRR1, and as well the introduction of the Capital Requirement Directive number 5. So it's evident the following indication given from the Financial Stability Board and EBA, the European Banking Authority, by the last reports that will be addressed to the European Central Bank a very straight and clear message in order to pay attention at ESG risks. The reports, both reports addressed to the ECB a clear message in order to introduce by the CRR2 a new mechanism in order to consider the ESG risks. Particularly, the EBA, the European Banking Authority, was entitled from the European Commission to establish, since the reform of Basel III, a green supporting factor in order to recognize a better credit rating to the exposures to the borrower which meet the ESG metrics. So this is expected to enter in force in 2026, but maybe also will be brought forward. And as well, on the shorter time, will be expected in the next year, the entry force of the green asset ratio, for which the credit institution will see attenuated the weight of green assets in respect of global exposure at risk of credit. As also to be considered that the pandemic caused the the brutal forward of some new rules foreseen in the capital requirement regulation 2. We will enter in force next year, but will anticipated at this year. Particularly, this concept was stressed me by my attending to the B20 infrastructure finance task force, was the introduction of infrastructure supporting factor. We allow the bank to weight lower the exposure for lending in the infrastructure sector. But the quite strange situation is that, just to recall the remarks done by Annika Kroon previously, the shipping is not considered infrastructure lending. The shipping is considered by the regulation as specialized lending. On my point of view, this is not acceptable, and this is one of the main point, one main strategic point or goal to be considered by the business body representative, included the ECSA under my responsibility as a chairman of Ship Finance Group, to debate, to enter in countering with the regulators in order to discuss of this point. So as you know, and is well known by everybody, the ship lending market volumes downsized roughly 30% in the last 10 years. Is a let me say is a leading actor in this sector. I can confirm. But meanwhile, the fleet kept still a growth pace. What this meant? This meant that more equity was injected from the ship owners, and the financial need was only partially funded by the alternative capital. Most of this capital invested was channeled to green and sustainable investment. I saw by the presentation of Annika Kroon that we'll expect an additional capital for 230 billion to be invested for the to meet the ESG criteria. But we have to be considered that above 46 billion was invested in the last 10 years to make more green the shipping under several rules or just on the voluntary based. Consider that the investment in the new water ballast system, consider that the compliance with the EDI and CAPCM, consider other ancillary mandatory rules which incentivized the ship owners to invest hugely to become greener. And so just to give you a outcome of my recent study, this investment impacted in terms of negative return on the investment done by the ship owner for -2%. Roughly, just in few words, the return on capital employed of investment in shipping was impacted for 20%, negatively impacted for 20% due this. So the wave of banking rules we will enter in force in next year will couple with the taxonomies. Let me underline that the use of plural, whereas a mess of private and mandatory initiatives are overlapping. So just an example, the EU taxonomy is addressed to EU members, whilst the banking and shipping rules are applied at global field. Doesn't make sense, let me say. The risk of shipping we run is that the financial gap will become wider, since the above explained effects will be double. On the bank side, the tighter regulations will make the lending market dry, and on the other ones, on the borrower side, the miscellaneous speed of enforcement of taxonomies can cause multiple negative effects. But personally, I am optimistic for nature, and let me stay optimist. For what I will say that this may represent an opportunity for our industry, and after I will tell you why. This situation opens the room to feed more greenwashing initiative. Recently, you saw what happened in the USA, where the WS, the asset management branch of Deutsche Bank, was investigated for greenwashing financial product sold to their clients. Personally, I think that shipping does not need of green finance. It's a strong statement, but it needs of a transitional finance. We are overly focusing our effort to make the shipping green, but we have to work aiming to avoid that the shipping should be considered brown. This is a very important point. Nothing against to Poseidon principle, and you several times you heard me and you interpreted my opinion as a counter to Poseidon principle. But to understand what's the reality, which are living now, these are founded, so Poseidon principle are founded on the AREOI, while the EU taxonomy draws the rationale from the EEDI. The taxonomy is restricted in the scope of EU companies. Instead, the Poseidon principle are addressed to the global shipping cluster. I wondered what will happen when the green asset ratio and green and social supporting factor will come in force, how they will tune in these mandatory rules with other private and so I underline private convention globally accepted from the most of international shipping banks will work. So we are very astonished. So personally, I am astonished and also worried since the scope of EU taxonomy and we see a lack of coordination and interaction among ETS, FuelEU, F.I.T, F.55, and within the same taxonomy. An example, so the fast pace in the adoption of Article 8 of taxonomy, referred to the reporting activities, is not correctly tuned in with the time frame scheduled for the entering force of a first delegated act. And this is particularly relevant for a transitional sector like the shipping. Shipping is considered under the taxonomy as a transitional sector. So our current attention is centered on the second of the two technical screening criteria as mentioned by Thomas, which established by under the Article 610, 611 of the first delegated act that the vessel is not to be dedicated to transport fossil fuel to comply with the criteria until 2025. But keeping in mind that our main challenge is to raise further financial sources to overcome the transition time. I think that it should be wrong to pay overly our attention to try to change or delay the application of these criteria established and under the Article 19 of the taxonomy. Rather, we have to work to another 3 criteria pivoted on the EDI in order to facilitate the access to the transition finance until 2025. In few words, we have to struggle to make wider the room between the threshold of substantial contribution baseline, which established by the technical screening criteria, above which the industry is considered green, and the significant harm ones, below which the sector does not comply with the taxonomy in order to get more room, and is considered brown, in order to get more room in the middle and allowing larger source of funding for the transition.
Sorry, Fabrizio, to interrupt, but given the limited time.
I have finished. My message is this. The last one is the most important message I want to address to the floor. Thank you very much, Martin.
Thank you very much, Fabrizio. You touched upon quite a number of very relevant points. So, turning quickly to Guust. Guust, can you please comment from, let's say, on the challenges you heard, and also, if possible, reply to some of the remarks of the previous speakers. So, Guust, the floor is yours.
Thank you very much, Martin, and thank you for inviting me to this webinar today. Maybe a few comments on what I've heard so far. I think first of all, I fully agree with what Thomas Reder said, that 3 decades of experience may actually be a disadvantage in the challenge we have today, because we really have to come up with new solutions, and the baggage and know-how which we have built up over the past 3 decades, although I like to think out of the box, may well be a disadvantage. So it's good to bring in younger people as well, I think. I would like to also comment on what I've heard a couple of times on the word "we need to be competitive," on which I fully agree, of course. But what I don't hear enough in the various discussions, also in other platforms, is that we need to be aware of the fact that we actually, as a shipping sector, selling a different product. If you always want to be competitive with today's business as usual reality, probably we will not get there. We are selling a different product, which is zero emission transportation. And that probably carries a different price, or at least is a different market, which ultimately will bring a new price, a new balance there. I think that's good to keep in mind always. Maybe a comment on the remark by Thomas that asset-backed financing. I will actually come back to that in my presentation as well. That asset-backed financing with a green angle should be amply available. Of course, that's good to pay for the investments, but there's a number of ifs and buts there, and the most important one is probably we always need to keep in mind that financing follows what happens in the real economy and is not driving the real economy at the end of the day. And of course, we can try to facilitate as much as possible. And finally, a comment made by Francesco, I think, about European versus global. Absolutely, the more a common approach we have in the world, the better it works. But I think we should not underestimate the power Europe has to drive also the global agenda, and we should never underestimate how big actually the fleet is, and therefore the potential impact that primarily trades in the European waters, whether it's ferries, whether it's short sea shipping, etc. And so I fully support the approach that as IMO is probably not moving fast enough for a number of reasons in the decarbonization challenges, that Europe takes the lead and sets the pace. So can we please go to the next page? I would like to take the opportunity to start with a few comments on who is Prow Capital. Prow Capital, we are a new fund manager that is basically there to provide senior secured or asset-backed funding to the shipping industry to enable and accelerate, I would like to say, the transition to a climate neutral state. And the goal is there to help our clients reduce their greenhouse gas emissions in acceleration. We are running a 400 million euro debt fund, which we can use for this. As a first step, we are targeting European ship owners. So it's a European initiative. We can do both new builds and retrofits, and I think Thomas referred to the fact that new builds is probably a quicker road towards decarbonization than retrofits. I think personally that given the size of the existing fleet on the water, the retrofits may well be a good low-hanging fruit where a lot of quick wins are to be made. We are technology agnostic. It was already mentioned how important it is. As long as it is proven, it works, and you can actually measure the impact it has on carbon emissions, we are happy to support. We can offer competitive pricing, which is important. Our team is not only a team of traditional ship financiers like myself, but we have strong skills in fund management, maritime technology, and also ESG finance, let's say, in the team, in order to take a holistic view on the issue at hand. Now, on the emissions of the fleet we finance, we monitor, measure, and report the emissions, and therefore the avoided emissions, because we hope to and expect to have the most efficient fleet in our portfolio. And last but not least, I think what we are finding out that customers and prospective customers like to work with us also, let's say, on the advisory side, because if we accept a ship, an eligible ship in our portfolio, that can actually validate your decarbonization strategy. Now, let's go to the next page. I would like to make a couple of general comments on the topic of today. So that's let's say not part of the PROW discussion, and take a perspective from the private sector, how much the private sector can contribute in order to how to say that, to get as much work done in terms of carbonization without the support of various governments, in order to make the euro that comes from the EU or national governments as effective and as efficient as possible. Just setting.
Sorry to intervene. You have 5 minutes for your presentation, so if you could concentrate, please, on the main topics. Thank you.
Yes. Well, just quickly setting the scene on this page. You probably know the left-hand graph, which shows the business as usual expected emissions going forward of the global shipping industry, and the dotted line is where we need to be in order to comply with the Paris Accord. So there's a huge challenge there. At the meantime, you see on the right-hand side what Fabrizio already mentioned. You see that the world fleet is growing and will continue to grow going forward, whilst the availability of bank financing keeps shrinking. If you then go to the next page, because this is all business as usual. In addition to that, on a worldwide basis, there's a huge amount expected to be invested in the decarbonization of the fleet. So the numbers are mind-boggling. If you go to the next page, please. Basically, the message is here. This is the biggest challenge, but also the biggest opportunity of our lifetime. I'd like to take a positive and optimistic view here. There are really, very interesting possibilities, and it doesn't help to wait for all the regulatory and technological solutions to be clear and there. It's probably much better to start here and today. If you then go to the next page, please. This is probably my key slide, and it's a story I've presented before. How can we, in the transition as a shipping industry, succeed in order to continue to have access to financing, to competitive financing, and be relevant and actually get paid for the transition we need to make? Because people have spoken a lot about the fact that all the burden is on the ship owner. I don't think it's true, and I also don't think it's necessary. If you look at the entire value chain in which a ship owner is active, in order to take steps and invest in decarbonization today, you need to involve the entire value chain. So your charter, your cargo owner, and ultimately get as close as possible to the consumer. Why does this work? Shipping is such an efficient means of transportation that the additional cost of, let's say, a ship which is 20% more expensive because it is greener to the consumer, to the end product which is being transported is next to zero. We all know that. And if you see what happens in the container business, for instance, today, the numbers that are being paid today are well in excess of the additional cost of decarbonization. So we can actually, in a much cheaper way than we need to pay for today's congestion, pay for the decarbonization, as long as you put the costs and the benefits at the right desk. And that requires new ways of thinking, new ways of contracting with your clients and your clients' clients. But it's possible, and it is actually happening. And so I've been involved in quite a few examples now where in various ways this has been done, and that the onus and the burden is not only on the ship owner, but he's actually able to put part of the burden on the shoulders of the charter and ultimately the consumer. I think this is very good news, and this is also the way financiers, whether it's equity financiers or debt financiers, look at shipping and transition today. It's fine to have a more expensive ship because it is greener, but that also, if you look at the traditional way of asset financing, that implies more risk. Whereas if you make yourself part of the value chain, also contractually, it's actually lower risk. And it also turns out that you then team up with quality people in the industry, because those are the ones that make the move towards decarbonization earlier than the average player, let's say. So I think this is of course an ideal world, but something you should strive for as a ship owner today, because regulation, technology will continue to be unclear for a number of years to come. But if you're able to share the burden and the benefits in this way with a longer term approach, you will have continued access to financing and to at the right price. So can we go to the next page, please? And if not, it's been discussed already, you'll start becoming less competitive because you need to pay more under the ETS scheme or other taxation that may come your way. Your ship will become unfinanceable or less financeable, and ultimately it may affect your license to operate, and you will become less attractive for your customers. And because this transition is real and is probably going much faster than we all think today. If you go to the final page, then a few conclusions from my side. Climate change, as I said, is the biggest challenge and the biggest opportunity of our lifetime. That is a very general statement, but definitely also applies to shipping. Transition in shipping is technically, commercially, and financially already possible. Of course, there are uncertainties, but with the right structure, if you make yourself part of a value chain, the burden can easily be sustained. And targeted subsidies, as was discussed by Annika Kroon earlier, on excess OPEX and CAPEX in order to create a market can kickstart the transition where necessary. Financing is available for the right risk-reward structure, which may be different from what we have seen in the past. You need to be aware of that, because financiers consider sustainable value chains rather than standalone ships on an asset financing basis. Non-green ships run the risk increasingly of becoming a stranded asset. And last but not least, and most importantly, Proud Capital is ready to help you navigate the sector's transition. Hopefully that was within 5 minutes, Martin. Thank you.
Almost. Thank you, Guust, for the, let's say, clear message to the ship owners. I promised I would go back to Annika for reaction on some of the topics. I realized might be quite a challenge because a lot of relevant topics and remarks were made. But Annika, can I ask for a reaction? Let's say for a couple of minutes. I'm afraid we don't have time for questions because I would then give the floor to Access Vice President for his concluding remarks. So Annika, a reaction on to all what you heard, but only some elements, please.
Okay, thank you, Martin, and then thank you also the other panelists for very interesting discussions and points made today. I think the taxonomy was the one of the questions which was touched upon by a couple of the colleagues, in particular by Thomas and Fabrizio, and we have had with ECSA also many discussions on that. Where to start first? Taxonomy is a new framework. It's the most comprehensive, most complex initiative which I've seen in Commission in doing, because it covers all economic sectors, and those who are not covered are complaining, and those who are covered are also complaining. So in this sense that it brings together into one big picture the different approaches and legacy kind of systems which have been developed over the year in various sectors, and we have to make something consistent and comprehensive, simple and applicable across the economic sectors. So unfortunately, we have not came up yet with a genius solution to such a difficult problem. Now concretely about the taxonomy for shipping. You may know that shipping kind of jumped on the boat a bit late, and it means that we came into the framework which was designed by, let's say, road transport and land transport, in a sense that which was tailpipe emission driven, and which is not necessarily the framework which works for maritime shipping. But we considered at the time when the criteria were developed for shipping that it's more important to be part of the framework, and given that shipping is transitional economy, in taxonomy, the criteria will be revised and every 3 years. So we started to work on the criteria in 2019. Since then, now Fit for 55 is there, which sets the life cycle approach, at least for greening shipping, in particular for fuels. And the shipping criteria now in taxonomy are set until 2025. And it does not mean that as from 2026, only 0 direct emission solutions are recognized, but it means that as from 2026, we have to adjust the existing criteria beyond 0 emission so that they are aligned with the policy framework and also technology development. So this is the idea, and I admit that it does not come out very clearly at the moment, but it's reflected in the recitals of the Climate Delegated Act. So the criteria are developed by the Platform on Sustainable Finance, which is quite independent, led by let's say NGOs rather, and in their decision making. But we really push on the Commission side that they will start to work on the criteria for maritime shipping also on climate as to be applied as from 2026. And I think we are now in better positions given that Fit for 55 is out. And also that aviation becomes part of the framework, and they clearly come from the same perspective of life cycle approach as opposed to direct emission approach as maritime. So what taxonomy was yet mentioned that the scope of taxonomy that it applies to Europe and not globally. Martin, I have to finish.
Yes, sorry, Annika, if you can conclude, please, and then I can give the floor to Philippus. Thank you.
I hope that taxonomy will become a global framework, and it's definitely a framework in making. And very quickly, Fabrizio mentioned that we should move maybe away from this green or non-green approach, but it's precisely now reflected in this report from the platform to more finance transition, that there will be also sectors which can't contribute significantly to climate mitigation, but they can contribute. So this is a potential. Commission has not endorsed this report. This is for discussion, but this could be the way out. And also I've been reflecting on vessels carrying fossil fuels, which are excluded currently from the technology, that could be the window of opportunity for this very important part of the shipping sector to get recognized in the framework of sustainable finance. Thank you.
Thank you very much, Annika, for these remarks. Once again, we don't have the time for the questions posed in the chat, so we will come back to the participants that asked these questions. I would now like to give the floor, as said, to Philippos Philis. He's the founder of Lehman Solar Navigation and has been managing director since its establishment in 1996. He has been appointed as chairman and CEO of the group since 2009. The group is active in ship owning, ship management, and ship commercial operations and chartering, as well as in R&D, with a focus on enhancing the ship's efficiency and decreasing the carbon footprint. He graduated from Aachen University in mechanical engineering, and he's also a Harvard Business School graduate. He's elected vice president of the board of directors of ECSA, immediate past president of the board of directors of the Cyprus Shipping Chamber, and he chairs the board of the directors of the Cyprus Ship Owners Employers Association. Philippos is also an elected member of the American Bureau of Shipping, member of the DNV-GL Cyprus Committee, and member of the advisory committee of the West of England's P&I Club. He served as a member of the board of directors of the International Chamber of Shipping and the board of directors of USB Bank. So Philippos, giving you the floor for your concluding statements. Thank you.
Thank you, Martin. Ladies and gentlemen, it has been really a pleasure being with you all today and to follow the previous discussion of this webinar series. It is obvious that 1.5 hours is very little time to discuss such important topics related with the ship financing in the new era of decarbonization. The closing remarks can be considered as a brief recap of what has been discussed during the course of the 3 ECSA F.I.T webinars, and I will try to be very short. Let us remind ourselves about how to remain fit, which stands for finance, innovation, and transition. During these webinars dedicated to ship finance, we examine how to ensure finance, how to gain access to innovation, and how to transition to a carbon-free future. Let us remember today that European shipping is considered as a strategic asset of the European Union, and EU ship owners control some 40% of the world fleet and create 2 million jobs, both on board and ashore. This has been also mentioned in Martin's introduction. In order, though, to maintain EU shipping as a strategic asset for the European Union, inevitably, we need to secure by all means its competitive position. It is known that European manufacturers are established as the major players in innovation, research and development in ship technologies, while the European ship owners are the first to follow and implement those technologies towards the carbon neutral shipping. It is therefore imperative that the EU ship owners gain access to affordable ship financing, primarily from European financing institutions. Only this way they will remain competitive within the international shipping industry. In our first webinar, we heard that the competitiveness of the shipping industry goes hand in hand with the competitiveness of the European financial services industry. Regulating financial institutions will have a direct impact on the competitiveness and an indirect impact on the real economy and hence on the competitiveness of our industry. We do not only need to get the regulatory initiatives right, but both shipping companies and their financial services providers need to have a predictable and consistent financial regulatory framework. This becomes even more necessary, especially given that the asset that is under scrutiny, the vessel, is not a short-term investor, but rather an investment for 25 plus years. Any investment in new buildings now utilizing the technologies that are claiming zero emissions propulsion is lacking the certainty that the ship will not become a stranded asset in a few years' time, both due to the regulatory changes, but also due to the uncertainty of the future prevailing technologies. That is why it is imperative to ensure that any initiatives towards zero emissions remain technology neutral. We also need to make sure that financial structures are fit for purpose. In order, though, to ensure this, regulators need to recognize the diversity of the shipping industry and that no one should be left behind. It is necessary to take into consideration that there are differences in type and size of the vessels. There are also differences in business models and trading areas, and not least, there are differences in possibilities, resources, and challenges between small, medium, and large companies. We need, though, to remember that 80% of the shipowning companies within the EU are SMEs, and that every single vessel counts. On the one hand, regulators need to recognize that setting the goal for the future is the easy part. On the other hand, though, in order to get there, all stakeholders will be confronted with different opportunities, different challenges, and different financial risks. As the experts of the second panel highlighted, shipowners do play a significant role in innovation to decarbonize the EU shipping industry. Yet, it is a collective effort of all stakeholders across the logistics and supply chain. Innovation is a global challenge, with Europe being inevitably at the forefront. The European shipowners are contributing with remarkable projects towards the green agenda. Looking into the future, there are a number of innovative ideas how to live up to these expected ambitions. These ideas have to be financed and scale up so shipowners, small, medium, and large companies can equally benefit from these solutions, and thus providing a level playing field. More important, though, is the necessity for developing the required solutions for retrofitting the existing fleet. This will help the transition, contribute with immediate effect towards the absolute reduction of greenhouse gases, and will prevent the disruption in the world trade. This, of course, brings us to the topic of the last webinar of the F.I.T series, which was discussed today. We see the future goal and we would like to get there. We, as shipowners, are ready to run the marathon. The shipping industry is defined nowadays as an industry in transition. But first, we need to define what is transition. What do we mean by green today, and how can we measure our performance? Are all alternative fuels green? Should we, as shipowners, measure our emissions from tank to wake, or should be accounted for the emissions from well to wake? It is a controversial discussion, and the experts, including IMO, are debating to define our future. IMO should issue the right rules for alternative fuel standards and eventually not to disqualify carbon neutral fuels versus zero emissions fuels, at least during this long transition period we entered in. Therefore, all stakeholders, experts, should be part of this discussion, delivering their technical knowledge from all these different perspectives to collectively contribute towards the common goal of becoming a zero-emission industry. Putting on now the hat of a shipowner, I may share my own experience through our company's path towards decarbonization. It is known that today's available technologies are classified in 4 different categories. The first is the hydrodynamics, which may achieve up to 50% efficiency. Then the machinery that accounts for up to 20% efficiency, followed by the operational and digitalization processes, which can contribute cumulatively above 30% reduction of the emissions. As fourth, the alternative fuels will eventually manage to eliminate completely the greenhouse gases. We have been working intensively on the hydrodynamics and the machinery by designing our vessels to accommodate maximum cargo within the dimensions prescribed. We optimize the hull using computational fluid dynamics and develop the appropriate energy-saving devices. All above helped us to select the matching propulsion, that means my main engine shaft and propeller, to have the best possible outcome. The result was 35% reduction of the consumption and consequently on the greenhouse gases. Comparing these measurements with the index model vessel of the sector, I believe there is no much remaining to gain if you are still improving those parameters. Needless to say that our last new buildings are fulfilling the phase 3 of the EDI regulation already. The new challenge now is to explore all possibilities by using the big data collected real time from our vessels and optimize the routing using algorithmic models, artificial intelligence and machine learning processes. This exercise, together with an optimized utilization of the vessel and just-in-time arrivals at the ports, may contribute towards a substantial reduction of our AER and EEOI. Looking forward to the new propulsion revolution and the relevant zero-carbon fuels, we as shipowners will follow to contribute our respective part towards the green agenda within EU and globally. Of course, this transition needs the relevant funding at affordable and competitive terms. In order to run the marathon, we need the associated resources for which the regulators have a significant role to play. The regulatory framework needs to encourage transition finance towards the greening of the shipping activities and in parallel to maintain the competitiveness of the European shipping industry. Ladies and gentlemen, with these takeaways, I encourage all of you to look into the currently ongoing regulatory initiatives, join forces, and move ahead all together. Once again, thank you all for being with us for this series of webinars, and we look forward to continuing these vitally important discussions for the future of our industry. Thank you.